Assalamualaikum warahmatullahi ta'ala wabarakatuh.
Waalaikumsalam.
Everybody good? Okay, good. How are you? Everybody okay? All right. Today I'm going to finish up, hopefully, this chapter on the comprehensive income. And then, if possible, next week we will cover another chapter. Actually, we have one more chapter to cover on the tax. If we do that, I will do it briefly. And then we will, if we have time, we will discuss about the government budget deficit. That will be the last chapter. Okay, so let's continue with where we left last time. Right? Okay. This was where we stopped last time. Yeah. We're talking about the categories of income or the sources of income, all right? That was defined by Hicks-Simon. So Hicks-Simon income is a concept of comprehensive income. It is identifying, or it identifies income of an individual from all sources, all possible sources. Okay, all possible sources that will be considered as income. And what we were talking about last time was the three types of income. Okay, three types of income. One is income from labor, and then you have income from capital. And then what was the other type? Yeah, I think maybe I put it there. Okay, income number one is earning. Okay, earning, that means from our productive sources, salary, wages, commission, etc., from all sources. And I think another one, commission, benefits, other benefits. Okay, other benefits, and then transfer payment. Now here are all sources, correct? My sources here, can you hear me? The sources I listed here may not be exhaustive, okay? Any source that generate income will consider income, okay? So this one, and then your transfer payment, and then non-labor income, all right? Which one of them, all right, the one that is you get from the investment income, they call it capital gains. Okay, the profit or the dividend, these are all capital gains, where you get income from non-labor sources. Okay, all right. So basically, that is a broad category. Now, these are all sources. Okay, and what I want to do next is we look at a few sources that include in the definition. Okay, that include in the definition. And some of the sources we need to discuss. Okay, so let me go back to the PowerPoint. PowerPoint that I already used. Okay, I think I was using this one. Let me see. Income. And you have this one that was getting got it. Okay. So this is another explanation. So it include incomes from all sources. Okay, all sources, which I already described earlier. In terms of money, cash or in kind, explicit or implicit, realized or unrealized, and regardless of how they spend it. So that will be income. And then you got the, I think this one I think there is no problem about this. Okay, the capital income, capital gain, okay, which include part of the capital income. And then you have this one earning from labor sale transfer. Okay, I discussed. So the one that I have not mentioned, okay, income from all sources in terms of cash or in kind. Okay, that's number one. Number two, realized or unrealized. And sometimes, it's explicit or implicit. So what I will, or what we are going to discuss now is this kind of income. Okay, what do we mean by realized, unrealized? Or what do we mean by cash or in kind? Okay, so this is the things that we need to look at. Okay, first, the realized and unrealized. Mostly this is on capital gain. Okay, in other words, if you have some investment or if you have some assets, the value of your asset has gone up. So you actually has some capital gain, but it is unrealized because we don't sell it. Okay, you don't sell it. So you don't sell it, it's just on paper. So that is what we mean by realized or unrealized. So realized capital gain is the gains that you get by selling the asset, or by selling asset, or by selling your stock, your shares, or by sale of any capital good. The unrealized capital gain is that the gain is only on paper. Okay, the profit or the dividend is only on paper, but it does not. It is not realized. Okay, it has not been monetized. Why? Because we have not make a sale on that one. Okay, so you don't make a sale. It's only on paper value. On paper, there is a profit or there is an increase in value. So in other words, there is a capital gain, but it is unrealized. Okay, you clear on that? So that's the difference between realized or unrealized. Okay, so I give you an example. Let's say you have a house. All right. Now in 2019, the value of your house say 500,000 RM. Now in 2020, this year, it has gone up to 530,000. And you don't sell the house. Sometimes you don't sell the house because you are staying in the house. You don't sell the house. The value here is only what? Increase in value is only on paper. Okay, it's only on paper. So we call it unrealized capital gain. Okay, it's unrealized capital gain. So that is a capital gain, but it's just on paper. Now, the difference between realized and unrealized is if it is sold, then you become realized. Okay, realized capital gain if you sell the house. Okay, you sell the house at RM 530,000. So therefore, what is your gain? Your capital gain is the profit that you get from the sale, deducting the value of last year. So let's say 500. So your capital gain is 30,000. Okay, all right. Okay, good. So that is what the mean of capital gain. But this capital gain, we are assuming that you buy the house last year, lah, you know. But if you buy your house 20 years ago, you know, 2010, 10 years ago, and the value is 300,000, then the capital gain is not the difference between value now and value last year. It is the difference between your value now and the value that you bought. Okay, so your capital gain is now how much? 220,000. So the capital gain is not basically based on per year basis. You know, if you sell it within this year, that will be counted as income for this year. But the gain itself, okay, is the difference between the value now and the value that at the time you buy it. Okay, so it may be last year, it may be another different period. Okay. Now another example is this one. Let's say you hold some shares, okay, stocks or shares of a company. Okay, for example, you hold some stock of Felda FGV, okay, Federal Global Ventures. You hold this one. Suppose you bought it a few years ago, okay, when you bought it in, let's say, 2018, you bought it at 89 cents. Now the price to 20 becomes maybe 98 cents. So there is a capital gain here, okay? Because the price of your stock has gone up. So there is capital gain. And depending on the number of shares you have, say 1,000 units, so your capital gain would be equal to what? Equal to the increase in the price, okay? So 0.98 minus 0.89 multiplied by 1,000, okay? Because 1,000 is how much the number of shares that you hold. The share price is per unit. So here you got 0.09, okay? So your increase or your capital gain is 0.09 multiplied by the number of the unit that you have. That would be your capital gain. Now, if you don't sell it, it become what? It become unrealized. It's just on paper. If you sell it, then become realized. Okay? So that is the difference between realized and unrealized. Now, for H. Simon, whether it is realized or unrealized, it is considered income. All right? It is considered income. So it will be counted as your income this year. If you have increase in the value of your house, okay, in the value of your house, then what you will get would be the paper profit would be counted as income. Okay? All right. So that is realized, unrealized. Okay, any question about that? Okay, next. In-kind income. Now, when you have in-kind income, that income is not paid in money. Okay? It is paid in other things than money. it is in terms of goods and services. All right. For example, you have a job and part of the benefit that you receive is a car. So that car is in kind. Okay. You don't get the money, you get a car. Or they give you, petrol money. You don't receive the income, or you receive the benefit in terms of money. You receive in terms of petrol. Okay. Or you have medical insurance, or you are given, medical benefit or some other things. What else? What else? If you have a job, that's something that they give you, not in terms of money. Yeah, maybe they give you a house. Okay, your employer give you an apartment for you to stay. So that is in kind. All right. So in kind is the benefit that you get as part of your job that is not paid in money. Okay. So that is considered income. So how do they compute the income? They compute the income by determining the value of the service. Okay. For example, you have your in-kind income. Say benefit that you get is apartment. Now, how do you measure the income that you get from that apartment? How do you measure it? It's in kind. Okay. It's not that you get the money. You get every month, you got to stay in the apartment. So now, how do you measure, or how does the government measure, if the government do it, that income which is in kind? How?
Maybe the rent of the apartment.
They measure what? They will relate to some market value. Okay, market value of the service of, because what you get, you don't get the apartment, but you get the service of the department. Okay, from the good or service. So here you got the department. That means they determine monthly, what is the value of your benefit is the market value of the rent. Okay, the rent that apartment, if it is rented to somebody in the market. Okay, so if the apartment is rented in the market, open market, then what is the rent? Okay, that's how they determine your benefit. If the rental rate is 1,000 RM, all right, then that is your benefit. Of course, that may not be very accurate, but that is how they estimate it. We use the market value of the service that you get from the apartment during that period of time. So one way is to determine the rent, the market rent of that apartment. It's like getting the opportunity cost. Okay, so when you get the rent, you relate back to the concept of opportunity cost. Now, what about if it is a car? Okay, now suppose you have a car given by your employer. Suppose you are given say Honda City or Honda Civic. All right. So now, how do you determine the income that you get from that benefit?
Maybe the market value of the car.
If the market value of the car, that is the price, the cost of the car, but it is not the cost of the car. Okay, it is what they give you the car. You don't own the car. They give you the car. You will get the service from the car. Okay, so it will not be the cost of the car. Of course, the cost of the car is say maybe 80,000, but that is not how they measure the income. That is the price of the car. Okay, so it's more of what? It's more of the service that you get from that car. So how do you measure the service that you get from the car, you know, let's say for 1 month?
Maybe a payment per hour for a period of time.
So, you know, you have to estimate, okay, by some market measure. So one way to do that is you may, you know, if you say market rental of the car, you know, per month, let's say you look at a company that rent Honda City, and the rental price, okay, if you rent the car for 1 month, say the rent is what, 1,000 per month. So that is your income. Okay, so they will get, or, you know, suppose you buy the car, all right, and your monthly installment of the car, okay, some market value or market estimate. Yeah, one is by you look at the rental of the car, say monthly, okay, because normally they do monthly rental, say 1,000. So that is your benefit, 1,000. So that means that's your income. Or another way, you look at the loan, you know, when they purchase the car, the monthly installment. Okay, how much people pay per month for the car? Say 980 ringgit. So that is the benefit that you get from that car every month. So that's 980. Okay, so they will try. Okay, we will try to estimate by some measure from by using the market. All right. So this is in kind. In kind can vary from a parking spot that you may enjoy, you know, to a car or to apartment, to medical services. Okay. So anything that you don't get in money, but it is part of your benefit to your employment, that will be considered income. Okay. Anything? Any question about this? Okay. All right. So we have discussed two things. Okay, two things. One is realized, unrealized. One is in kind. Okay. Another one. Imputed rent. Now, what is imputed rent? Suppose you own an asset. Okay. For example, a house. I think this one would be more a house. You know, if you look at other things, I give you an example. It is quite clear, but a house is not very clear. Suppose you own an asset, a house. You live in the house, all right? So the idea of imputed rent, by staying in your own house, you are consuming housing services. Therefore, that is considered income, and they call it imputed rent. That means the rent that you have to pay yourself. Okay, even though the house is yours, you get the service from the house, that is considered income, and they call it imputed rent. Now, do you understand that thing? Do you get the idea? Okay, in that case, how do you determine the imputed rent? You are staying in your own house or your own apartment. How do you determine the imputed rent?
Market value of the current rent.
Again, you know, they make use of the current market value of the rent of the same type of housing. Okay, so if you're staying in your own house, of course you don't pay rent. Okay, so your own house here, you are staying there, they call it imputed rent. That means the rent that you pay yourself, okay, or the rent that you save by staying in the house. All right. So how do they determine that? You already, I mean, we already benefit or you already enjoy the services from the house. That means we are consuming the services of the house, the services from the house. So that's considered income. All right. So that's considered your income, and that is what you call in-kind income. Okay. Or imputed rent, more specifically. So how do you determine that? Determined by the market value. You know, market value of the house rent. So say if you rent your house to somebody else, okay, so that is opportunity cost. Huh? If you rent to somebody else, the rent is say 1,500. Okay, that 1,500 is considered your income. That means you pay by staying in your own house. You have to pay yourself the rent, and that is considered income to you, even though you don't pay it. Okay, all right. So that is imputed rent. Okay, what else? Imputed rent. Okay, here. Home production. Okay, another. This is implicit income. You are doing home production. That means you are doing some activity, some work at home for your house. Okay, it's not work at home right now. Okay, right now you work at home, you sell goods or you sell cake online. That is not you receive the income. It's not like that. Okay, home production means you perform a work in your house and you are not paid. Okay, for example, your mother. Okay, your mother stay in the house. Your father go to work. Your mother stay in the house, work from 8 o'clock in the morning to 8 o'clock at night. Or 8 o'clock in the morning, 8 o'clock at night, 24 hours, no stop. If that is considered home production, all right, then how do you determine the salary to your mother? How much income your mother will get? Okay, one good example, housewife. But now, you know, we have house husband as well, because the woman is doing better than the man. You know, you have the woman working outside, the man stay home. It doesn't matter now, you know, it can be the man, it can be the woman. But let's look at, you are looking at a house as a housewife. Think of your mom, all right? Now, our mother staying at home, doing the work, cooking, cleaning, whatever the work at home they do. Now, how do you pay your mom? Your father don't pay your mom, all right? Explicitly. Of course, in Islam, they have to give the nafkah, okay? But this is more than that. How do we pay? How do you pay the salary of that kind of work? How? Give me an idea, because this one is not so straightforward, you know.
Maybe compare to what kind of work that the mother does with the current payment the people receive for doing that specific work. For example, laundry, or I don't know. My point is, yeah, compare with
that's a good idea. That means if you hire a maid, okay, if you hire a maid to do the housework, okay, the maid normally they work at a certain time, you know. The maid may work from 8 a.m. to maybe what 8 a.m. to 6 p.m. You know, nowadays maid also have a time. After 6, no more work for them. And they do what? They do cleaning. They do housework. Lipat baju, basuh baju, things like that. All right? But they don't cook. Okay, normally maid don't cook. I don't know whether maid, other maid can cook. Okay? But the person who do the cook is your mother. Okay? So suppose, all right? suppose you base the payment or like a maid. So how much do people pay maid nowadays a month? Say 1,000 RM. Okay, per month. But I don't think that is enough. Okay, because the maid is doing a certain job only, but the mother is doing more than that. All right, so you have to add. If it is a cook, cooking, do the cooking, everything, then how much you add? Say another 800 a month. All right, and then what else does she do? Okay, everything. She will, she manages the house. Okay, so that is another 500. So probably about becoming what, 2,300 RM. So this is her salary. In other words, by doing the home production, she should have been paid that much per month. Okay, which was not paid, of course. All right, but that is considered income. Okay, that is considered income. Or if you do another way, let's say our mother here has a bachelor degree or B.Econ degree from UIA, and you choose not to work, but you become a housewife, then this is more expensive, Then how, if you have a bachelor degree, you stay home, then how do you pay your salary? How do you estimate how much you should have been paid? How? You have a bachelor degree, tak kira lah econ ke apa, maybe be accounting, or be engineering. So
maybe it can be more than 3,000.
It can be more than 3,000, depending on the experience. Okay, so if you have a bachelor degree, then what we do here is you get the market value. If she work outside, on certain job, how much she will get a month? Okay, say 5,000. So in other words, that is the opportunity cost. So you have to pay her 5,000. Okay, so that is home production. All right. Another example is this. Let's say you own a house. You stay in your house. You do painting. Okay, you paint your house. Not painting as painting drawing. Okay, this painting ni cat rumah. Okay, you do the painting of the house. Do yourself. Now that is home production, and that is income. Okay, you do the job, you get paid, income. But of course, you are not paid. All right. So you have to estimate. You do your painting for, let's say, 1 week. You finish the job 1 week. Then how much you should have been paid? So that is considered income. So how much you should be paid? Doing the job for painting the house 1 week. How do you estimate that cost? Anybody? How do you estimate? I think we have done a few things already. So you just, I think you can make a guess. How do you estimate? How do you estimate?
Compare the market value of a painter.
Yeah, then you get the market, the market price. If you hire a contractor, okay, if you hire a contractor to do that, how much you will pay her or him, okay? So if the contractor is doing it for $10,000, 10,000 ringgit for 1 week of painting, then maybe you are not as good as a contractor. So maybe, just for some not so expert, so maybe 8,000. Okay, so that 8,000 is your income. Of course, you don't pay yourself, all right? But under the Hicks-Simon concept, that is considered income. So your income from working there is 8,000. So that is income. So you have, you know, some implicit kind of income, like home production, that is not being monetized. But in this concept, that is considered income. Okay, all right. So let's see, apa lagi ada? Okay, you have the implicit, the home production. Okay, the home itself. Okay, the home itself. I think that is imputed rent. Okay, tadi kita dah cakap lah. Alright, so okay, now this segment income, they want to make it as comprehensive as possible. Okay, the idea is you want to have, or we want to make sure, you know, that there is vertical equity, and of course there is also horizontal equity. Why we do that? Because if you don't measure some of the income, then we may not be accurately presenting the differences in income or in the society. All right. So we hope to improve, you know, by doing this, the Hicks-Simon concept hope to improve the vertical equity. So in other words, if you have more income from more sources, that means you pay more taxes than another person that has less income. All right. For example, you know, I think an example will be like this. Let's say you consider, you know, a person A and a person B that this year. Suppose the job is about the same, you know, your income from salary, let's say you have 5,000. This guy also have 5,000, but this guy work in a better company, he get a car. Okay, this one no car. Okay, and he, of course, he got a car, he got some petrol benefit. Okay, petrol benefit, car benefit, petrol benefit. This one, of course, nothing. Okay, and then this guy, his grandfather just passed away. He got some income, you know, income from his grandfather, maybe inheritance income, because the grandfather is rich, he get another 50,000. Okay, this guy don't have anything. So now, if you just consider income as salary, you know, like that, they have equal income, they have same income, all right? But if you go by the Hicks-Simon concept, you have to look at the income from all sources. Okay, so this is an example. This guy here has a car benefit and petrol benefit. So suppose the benefit for the month is 1,500. So if you look at this, the total income for him is 6,500. So now their income is not the same anymore. Okay, B actually has more income than A. All right. Now you put into account this inheritance that he get one shot. You know, one year he got that. So for that year he got 50,000. So that year 50,000 to, you know, it's really a shock to the income. Kita buat. Suppose he get 5,000, 5,000. Okay, so he get now 5,000. So his income for that month is 11,500, much higher than this guy. All right. So the Hicks-Simon income concept is trying to address that issue, the issue of vertical equity, so that people with more income, more resources, they have to pay more taxes. So that's why, you know, we identify income of all kind, the all kind possible. In terms of horizontal equity, that means the people who are in the same in terms of underlying resources, they pay the same amount of taxes. So again, in terms of horizontal equity, you can also do that, so maybe, maybe you can think about this guy here, income is 2,000. Okay, this guy 4,000. This guy is 2,000. But he has what? He has some other sources of income. Let's say he owned a house. He rent the house for 5,000. Okay, so he got the rental house here, the rent income. So that becomes 7,000. All right, and that okay, don't take into account the inheritance. So 150, make it 4, so 6,500. 6,500. So make it here 4,500. Okay, 4,500, so 6,500. So by taking into account that rental rate here, his income is 6,500, same as this guy. So that makes sure that they have same income, pay same tax. Okay, so that is the purpose of the Hicks-Hyman income. All right, to improve the horizontal axis, to improve the horizontal equity, and also trying to improve vertical equity. Okay, all right. So this income is the ideal measure, the ideal one, is the best. And of course, in real life, we do that, or we take that as a benchmark. All right. So when we do our comprehensive income measure, we use the Hicks-Hyman as the benchmark. That means as our reference. All right. I think this one I will do later. Okay, I will do that part later because I want to look at something else first. I want to look at something else. Now, after you have determining the concept of the comprehensive income, I want to look at now the model, okay? A model of income tax, how it affects the behavior of an individual. And then we come back to some of these things. So I got early incline, the home, imputed rent. Okay, so this is a model of the tax on income. So this diagram here is in the book. Okay, in chapter number 13, that is figure 13.1. Now you have the diagram. In other words, how does a tax on income affect the behavior of the individual? Now let me check. I want to look at the detail of the model a little bit. Okay, so this model is called the what do you call it? Work leisure choice model. Now, when you are taxed, all right, on your income, how does it affect our choice? Either to work more, work less. That means either you want to spend time more in leisure, or you want to spend time less in leisure. So this model here is looking at the leisure model or work leisure trade-off. Correct? So the effect of the tax, income tax, on our work behavior. So let's look at this model. So this model here is the effect of tax, effect of income tax. And here we are using the flat rate income tax on behavior of an individual. And this behavior, the change in behavior is in terms of work, leisure, trade-off. Okay, choice or trade-off. Do we want to more work? We want to do more work or less work? All right. Now, when you say flat rate, that means the tax is given to everybody same rate, and it is only one rate. So, for example, 10%. So that is a flat rate income tax. All right, everybody pay that tax. Okay, for all. Everybody pay, regardless of your level of income. You pay 10%, so that is called flat rate. Or that will be equal to 0.1, 10%, 0.1. Now the income is the following. You define income, I, as equal to W multiplied by H. Now W is the wage rate. That means how much you earn a day, okay? So here per day or per hour. For example, let's say per day we earn 200 ringgit a day. So that is our wage, okay? Wage rate. And then you multiply by H. Now what is H? H is the working hours per day, okay? Working hours per day. So for example, if our working hours per day, so working hours per day, they are looking at day per day because we're looking at 24 hours. So the wage rate here is more per hour, correct? So for example, let's say per hour, we are paid about 30 ringgit per hour. So working days here, working hours per day lah. Right? So example, let's say we work a day 8 hours. So therefore our income per day, okay, this per day is equal to what? 30 times 8. So that will be equal to 240 ringgit per day. Okay, so this is per day basis because you want to relate to the 24 hours a day. Now, working hours, which is equal to WH, in a day, that is 24 hours. All right, 24 hours. So the working hours is equal to 24 minus L. Now, L is the leisure hours. So the time that you spend not working, that means leisure, regardless of what our activities. You may sleep, you may cycle, you may play chess, you may go running in the park. That is leisure, all right? So the time that you don't spend working is called leisure. So H plus L equal to 24. So you have 24 hours. Either we do work or we do leisure. And of course, that 24 hours is limited, okay? That is fixed, that's a constant. But the choice between H and L, that can vary. Okay, so H and L is a variable, or H and L are variables, but the sum of them is equal to 24. Okay, all right. So let's go into this model more closely. So the income is equal to WH, and income can be written as WH, since H is equal to 24 minus L. So you got W times 24 minus L. So that will be equal to 24W minus WL. So that is our income line. So when we draw the income, okay, we draw the income with respect to L. Okay, W here is a constant. W wage rate given as 30 ringgit an hour, that's a constant. So this is a constant, the L is a variable, that is a constant. So therefore, the slope is negative. So our income line, all right, if you look at the book, in that page, in figure 13.1, our income line is just like this. This is your income, that is your leisure hours, will be like that. And of course, that is 24 hours. Okay, the maximum here is 24, and that will be whatever that you get, the total income. Okay, so this I here is the maximum working hours. If I work 24 hours, all right, no leisure, if L equal to 0, then what is our income? Our income is 24W. So that is 24W. Okay, you don't have any leisure. You work 24 hours. So that is your maximum income. But we don't do that. We do sometimes in between. So our optimum point will be equal to when the utility function, okay, intersect that. So call that E0. So you will have L0, W0. So the wage rate is W0. The number of leisure you get is L0. And from there, we know how many hours you work. That will be what? 24 minus L0. So that will be H0. Okay? So you got that, you got W. Now, when you impose tax on W, the tax is on the wage. Okay? And of course, that will affect our income. Now, if I impose tax on the wage, what happened to the budget line? Suppose the tax is equal to T. All right. Now, you tax on the W before the tax. Let's say you got W, okay? That's our W, which is equal to W. Now, after tax, W equal to, say, W0, maybe, let's say try to W0, W, say W0. Now, we do this. Or, let me try. Okay? And then we see after we're done, see whether it is okay or not. Now, after tax, the T, okay, and T is flat rate in percentage. Then our wage after tax, call it W1, is equal to W. Okay. Now you have to take out the tax. What is the tax? The tax is T times W. So that will be equal to W1 minus T, because it's a flat tax. It's a rate, so it's percentage. So if the tax is 10%, 0.1, W is 30. So what? So your net W1 equals what? Equal to 30 minus 0.1 multiplied by 30. Okay, so that will be equal to what? 27. So 3 ringgit here is your tax. 3 ringgit, 0.1 times 3, that is our tax payment. All right, so the tax payment is equal to the amount of tax you pay, T, capital T, is equal to the tax rate multiplied by the W. All right, so that will be the tax rate. So W1 is equal to what? W1 minus T. So now if you have the lower rate wage, so essentially that will be just a reduction of W by the amount of the tax. Now, if W is reduced, what happened to the budget line or to the income line? Our budget line was equal to this one here. W multiplied or 24W minus WL. Now, if W now here is reduced, okay, what happened to the slope of the line? Will the line be flatter or be steeper?
I think flatter.
Be flatter.
Flatter.
Flatter lah. Okay. You have your -3 now becomes -2, so the slope be flatter. All right. Now, when the slope is flatter, the intercept here doesn't change. Your hours in a day remain 24 hours. But due to the lower wage, the maximum wage will also be reduced. So due to the tax, okay, your W will be rotate downward like this. So you have here, this one here now becomes 24 W 1 minus T. Okay, 1 minus T. But don't worry about that. We just know that the wage is reduced. All right. So when the wage is reduced, the maximum wage is also reduced. So intercept is smaller, but here it doesn't change. 24 hours a day doesn't change. So therefore, if you look at the effect of that thing, you look at the book. How does it affect our behavior? So I show you the figure. Mana dia? Ni ada figure. All right. So if you look at this diagram, the equilibrium E0 is this one. All right. I use L0, L1, I1. Okay. The book uses L1, I1. Doesn't matter lah. And then after the tax, your new budget line or your income line will be this one. The new equilibrium is E1. Here they use E prime. And new labor or new L, leisure, is L1. Your new income is I1. Okay, call it I1. So, what happened to your work leisure choice? Just compare the equilibrium, do the comparative statistics. What happened here? So the equilibrium, okay, if I follow what the book has, the equilibrium will be here, somewhere. So that is U1, you got E1, that is L1. That is, this is not W0. It's, I call it I0. Okay, and now it's I1. So what happened to leisure? After the tax, what happened to leisure?
Leisure time increases.
Leisure time increase.
Okay, due to the tax, we work less. All right, so leisure increase, that means you work less. So due to the tax, you compare the equilibrium. E0, E1, all right? You have here number 1, here is L1, this is L0. You see here L1 is bigger than L0, so leisure increases. When leisure increases, that means working hours will reduce. So due to the tax, we work less, all right? So the opportunity cost of work now becomes smaller, okay? Smaller will increase. But anyhow, it's the working hours now becomes less. All right. Now, if you look at the income, here you got I0, this is I1. You see that I1 is less than I0, of course, income will reduce. Okay, 1 is due to the tax. Okay, of course, due to the tax, your income increased. But there is also another source of decreases in the income. Why? You work less. Okay, you work less, so your income increased. One due to the tax, the other, your income or your income decreased. Why? Because you work less. Okay, previously I worked at, let's say 8 hours a day. Now, due to the tax, I might work only 7 hours a day. Why should I pay to the government? So I worked at 7 hours a day. And that means due to the tax, I have to pay, and then I have less income. All right. So that is actually, this is quite intuitive, you know. It's just a reduction in the wage. Okay. All right. So that is the work effect of the individual. Okay. The work effect of the individual due to the tax. Okay. Any question? All right. Okay. Now, I have about 20 minutes, 15 minutes. Okay. 15 minutes left. So now what I want you to do, I want you to do a problem, okay? In class problem. This is like a homework, and I want you to submit this thing to me. Okay, I would like you to do this question here. The question in the book. Go to chapter number 13. I would like you to do the problem. Problem number berapa? Chapter 13. Go to chapter 13. And tadi I already saw that. I already saw the question. No, what is that? Okay, give me 1 minute. No, okay, actually, this is on chapter number 11. Yeah, actually, chapter 11. So go to chapter number 11. Yeah, chapter number 11. So this question here is on chapter number 11. All right. Now, chapter 11, you go to problem number 1. Okay, problem number 1, the tax on liquor. Okay, this one is quite relevant because if you recall, you know, a few weeks ago, but it's tax on cigarette, you know, it's quite similar. Why, you know, one reason why they should reduce the tax on cigarette. Okay, that was a good statement from the government, from the minister. The tax on liquor. So now I want you to do this question. Make it A, B, C, D. Okay, every part of the question, you make it A, B, C, D. Now, I want you to submit this question. So do it by yourself, all right? Use a regular size paper, A14 paper. Write your name and your metric number. Okay, and then you submit to me after this. I give you 10 minutes. You submit through Classroom. Okay. All right. Now I want you to try to do that question first. I give you 10 minutes. After this, I will review that question with you. Okay, I want you to do it now. Do it on your own, okay? And then I will review. So while you do that question, I will put the assignment in classroom. Okay, do it now.
Sir, I have a question. Sir?
Yeah, go ahead.
So the question, we need to break up into 3 parts, is it? Based on the...
I don't know, you look at the question, either 3 parts or 4 parts. Okay. So before you calculate the excess burden, okay, you have to calculate the competitive equilibrium, and then you have to calculate the after-tax equilibrium. So make that first part. Okay. Because in order for you to get the excess burden, you need the competitive equilibrium. That means equilibrium before the tax. And then we need equilibrium after the tax. Okay? So that 2 equilibrium make it part A. That will mean the excess burden will be part B, and so on. Okay. All right. Okay. Anything you can you can raise it up now. Okay. Any question that you have, you can raise up now.
Sorry, sir.
Yeah.
Sir, I just go to toilet just now. I want to ask this homework I have to submit after this.
Yeah, you submit now. Okay. Submit.
Oh, okay. Okay, thank you, sir.
Did you go to the toilet or you just came in?
No, saya dah masuk dari pagi tadi, tapi saya pergi toilet kejap tadi. Lepas tu saya tak dengar tadi sir bagi tahu apa.
Okay.
Okay.
Okay, you do the what you call it? We do the competitive equilibrium first. Okay. Okay, I already assigned this assignment, in classroom. So you send to me, you email to me, or you submit your answers afterwards, okay, through this assignment. So if you look at this classroom here, I have a class homework. So this is the one, okay? The class homework, the due date is now, okay? All right. Okay, everybody got the competitive equilibrium. So first thing that you need to do, okay, number A, you get the competitive equilibrium. Now, competitive equilibrium, how do you find it? Demand equals supply. Okay, so you have the demand, you have equal to the supply. Very easy, you just get that. So if you work that out, what do you get for the Q? Call it QC. Apa dapat lah? Or did we use Q0 or QC? Q0. Okay, what do you get? Q0, anybody? First person get it, tell me.
300,000.
800,000.
300,000.
400,000.
Everybody get 800,000? Oh, I mean, that's correct. Okay, now what is P0?
Sorry, sir. 800,000.
800,000. I don't know. Somebody say 800,000.
It's 300,000.
It's 300.
300,000.
300,000. Yes.
Yes,
okay.
300.
Okay, 300,000 eh. P, berapa P?
10.
P is
30.
10.
10. Okay,
1 0.
P is 10.
Yes.
Okay, so you make the conclusion. So the market price, all right, or the equilibrium price, or the competitive price. So you say the market price before tax. So you can say here before the tax. Okay, before tax, the market price is RM or dollars 10, and then the quantity is gallon, 300,000 gallons per year. Now, as you know, liquor is not good for people. You know, in Islam they put haram, but for others they don't say haram. So you want to discourage, okay? You want to discourage liquor. So one way the government do is they impose tax. The government will get revenue, and hopefully they will reduce the amount of the consumption of this sin. For example, not just liquor, it also, you know, cigarette, liquor, all those things that have negative impact on people. All right, so the government imposed the tax. Now, when you impose tax, equal to how much? Equal to $1. Okay, $1. So what we do here is, okay, you find the equilibrium after the tax. Now, one way to do, okay, which I normally use, okay, because this is very consistent with the diagram that we normally draw. When you draw the diagram, you draw the price on the vertical axis. So you got the demand over there, you got the supply over here. So you make the price as the dependent variable, and you increase the price. So that is very consistent with the diagram. So what I normally do, okay, I want you to do this. You rewrite the demand function and the supply function. So what you have will be, for the demand function, okay, you rewrite Q, P is a function of quantity. So you get what? I get the price now equal to what? Equal to negative Q, okay, plus 500,000. Everything divided by 20,000. Okay, you got that? And then similarly for the supply, you write P in terms of Q, so that will become P equal to what? Q over 30,000. So when you do this, we just add the tax to the price. Because when you do the discussion, you say the marginal cost is the supply, after the tax, marginal cost is MC plus T. So essentially that is presented by this form of the function. Okay? Everybody got that? Okay, now, you impose the tax on whom? On the sellers, okay? On the firms. They didn't say on the consumers, it's on the firm. So the effect will be on what function?
Supply function.
You put the tax on the supply function, okay? Because the tax is imposed on the firms. Now we know the statutory incidence, either is on the firm or on the consumers, the effect will be the same. Okay, there was tax equivalence. We discussed that already. But for the question, the tax is imposed on the firms, therefore the supply function will decrease. So what you do, okay, what you do, you plus tax over here. Okay, you plus tax there. So you plus 1 ringgit to the supply. Okay, now get the equilibrium. Okay, do it quickly. So that become Q over 30,000 plus 1. Okay. Betul tak? I think betul. P negative Q. Yeah. Okay, you got it? Okay, work it out. Okay, go slow. All right, don't rush. Make sure we got it right. Okay. You check the signs, you know, because sometimes when you calculate, make sure the signs are consistent. Okay, after tax equilibrium. So what you have now, S1, okay, after the tax is equal to MC plus T. Okay, MC plus T. Now write it down. The supply function after the tax. Okay, this is what I want you to do. Don't worry whether your answer is wrong. All right. Now, as you do it, if your answer is wrong, don't erase, okay? Don't erase. Keep it there, all right? But as I move on, you will just write down the right one, okay? Either beside it or, you know, I think beside lah, or below it, doesn't matter. But write the correct one beside or below. So don't take out, don't erase, don't cut whatever you have done, okay? I want to see what you have done. Doesn't matter whether it's correct or wrong. Oh, correct or wrong? Yeah, correct or wrong. So that will be equal to what? It will be equal to Q over 30,000 plus 1. So when you do this, make sure you write this one. Okay, don't jump. Yeah. Because when you jump, that means you do show all the work. All right. So I can become suspicious. Okay. So you have the new supply function. So after tax equilibrium, the demand will be equal to S1. So what do we get? You get negative Q over 20,000 plus 50,000, 550,000, 500,000, 500,000 divided by 20,000. Okay, equal to Q 30,000 plus 1. So you bring the Q to one side, the constants to the other side. So if you look at this, everything will cancel out. Boom, 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 25. Okay. So here you will get 25 minus 1. So you got 24. Okay. You bring Q to the other side. We got Q over 30,000 plus Q over 20,000. Am I right? Everybody do this, or am I wrong? Or you are wrong? Is it consistent with you? So now, okay, yang ni lah, you cari Q. Okay, so anybody who has the Q, what is the Q equal to? Okay, here, finish it up. All right. Anybody got Q?
I found 288,000, but I'm not sure.
Apa?
I found 288,000.
No, the Q, quantity dulu. Q1, 288, berapa?
288,000.
000.
000. So that is Q1. Everybody got that? So this is Q0. It makes sense, lah. You know, Q0, you have E0 over here. Okay, draw the diagram. Okay, draw the diagram so that you can visualize this. So this is in thousands. So you got here 300. Here 288. And P0, I use another color. P0 apa tadi? P0 10. Okay. Now when you get 288, there are two prices. Number one is the price the consumer pay. All right. You put back into the demand function or S1. Okay. So you got that PC. And then P0 or PF, or not P2 or PF, you substitute into the original supply. Then you get the firm's price. All right. Okay. So when you get that 288,000, you have to substitute twice. Okay. So number one, to find PC, okay, the consumer's price. What do? That's why, you know, we draw the diagram, you can see it. To find the PC, you substitute into what? Either you substitute into the demand or you substitute into the S1. Okay? So use the one that is simpler. All right? If you use that one is simpler, then you substitute into S1. Or you can substitute into D. Okay? So you do that, what do you get? Ni S1 ni. Okay, S1 or D. Okay, anybody get? You must get higher than 10. If you get smaller than 10, that's wrong lah. Okay, what do you get?
10.6.
Siapa dapat dulu?
10.6.
10.6. Okay, you substitute into the S or into D?
I substitute into S.
Okay, substitute into S1. Okay, you work it out. You will get P, boom, 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 equal to 10.6. Okay, 10.6. Everybody got that? Or if you got it wrong, do the correction. Okay. So that price PC will be here, 10.6. And we know the tax is equal to 1. So therefore, you know, by default, I know that this one should be what? 10.6 minus 1. That will be what? 9.4. Betul? 6. Tolak 1, 9.6. So here it should be 9.6. All right. We know that the tax is equal to $1. So you know the T is equal to what? PC minus PF. So therefore, PF is equal to PC minus T. Okay, so you get that. Now, of course, you know that, but I don't want you to just do it. I want you to substitute Q1 into S, all right, into the original supply to get what? To get PC, oh no, PF. Of course, we know that PF is equal to 10.6 minus 1, that will be equal to 9.6. So 10.6 minus 1, that will be equal to 9.6. We know that already. But I want you to work it out through the supply function. So substitute into the original supply function, you will get 9.6. Now, do you get it or you don't? If you don't, that means you must get very, very close. Okay. Sometimes involve fraction, you know, depending on your decimal points, you might get 9.59, something like that. Okay, do you get 9.6?
Sorry, sir, I'm confused. Which one should we substitute? Substitute Q1 into. I'm confused. Which one are you asking for? Is it, should we substitute Q1 into S?
For
Which
what?
S?
Depending on what you want to find. Your question should
9.6.
be, you want to
Based
find
on.
PC or PF?
You asked us to find 9.6.
Then you substitute
But
into
to,
what? Into which supply? Cepat. I want the 9.6. So which supply function do we substitute the Q into? Supply after tax, supply before tax. Very clear here, you know. It is already clear in the diagram. So which supply function are you going to substitute into?
S, is it?
S lah. Okay, the one before tax. If you substitute the supply after tax, then you get 10.6, which you already get. Okay. So to get the firm price, you put the Q into the original supply. Okay. If you put into the new supply, you will get 10.6, which is equal to what you already got, which is the consumer price. So that will be the supply function before the tax. Okay. All right. So you will get 9.6. Okay, everybody got it? Okay. All right. So now, what I want you to do, you got the 9.6. Okay. So we have no more time left. So the next one, call it B. Excess burden. How do you calculate excess burden? You use half T multiplied by delta Q. Okay. Now, what is delta Q? The T is equal to 1. Delta Q, how much is delta Q?
$12,000.
Berapa thousand?
12.
12,000. 300 or 288 minus 300,000. So you will get negative 12,000. So you put that negative 12,000. All right. So you get the value. Now you have to find delta Q lah. Okay, delta Q equal to what? Equal to 288 minus 28,000 minus 300,000. Okay, so this is equal to Q1 minus Q0. So make sure we know what we're talking about. Okay. All right. Now the next one, the incidence of the tax. Okay, C, revenue. Revenue, very easy. How to get revenue? The tax multiplied by Q0 or Q1?
Q1.
Q1.
Q1, don't multiply by Q0. Okay, Q1 is the quantity after the tax. So you got that. Okay, so you get the value. Do it now. Now for part D, also very, very simple. That will come from the incidence of the tax. So you know the tax is equal to PC minus P0, okay, plus P0 minus PF. So from here, you will get the incidence of the tax. So you put in the values, okay? Then you discuss, or not discuss, you describe that 60 cents, okay? 60 cents of the 60 cents or the burden of the tax on whom? On the consumers would be what? Dollars 60, you know, dollars are $0.6 or 60 cents. And the burden of the tax on the firms would be 40 cents. Or you can say the share, okay? The share of the tax on the firms is 40 cents. The share of the tax on the consumers is 60 cents. So you can say the consumers will have to bear a higher burden of the tax. Okay, consumers will have to share the higher burden of the tax. So you can also relate that probably the demand is quite inelastic. Okay. Okay. Any question?
So when we submit our part, not your part, right?
Whatever lah. You know your part. If you write what I do here in your answer, then submit everything. Because I said you do yours. You know, when I do mine, you can put in if you got it wrong. You know, if you are not sure, you put in mine. You add, but don't erase yours. Okay, keep it. Okay, keep it, and then write what I write here. If it is different, okay. If it is the same, then okay lah. Okay. So you finish up whatever calculation that you need to do here, and then you know some of the things I write because I want to guide you doing this kind of question. Okay. Okay, good. Any other things? Now, this would be a bonus question. Okay, it will be a bonus homework. So you submit to me, everybody will get full mark. Okay, because I guide you to go along. If you got it wrong, I give you my solution here. You know, I hope you did the correct one. So don't worry whether you got it wrong or you got it right. I will just want to, you know, want everybody to practice. Okay, because this kind of things, I look at the exam. Some people still couldn't do this kind of question. So either for externality, all right, for tax or for subsidy, the equilibrium, okay, equilibrium you determine if you are given the function Q, function of P, then when you to find the equilibrium after the externality or after the tax, it's good that you write in terms of this function, P, function of Q. So you just reverse the dependent variable. Yeah. Why I do that? Because consistent dengan diagram. Okay, and then you can do it directly. Okay, so that's why I do it here, because I want to show how it is done. Sometimes the function is given Q in terms of P, but you want to find the equilibrium. For competitive equilibrium, no problem. But for the equilibrium after externality or after tax or after subsidy, this one, you know, more consistent. I think to me it's easier. Okay, so just rewrite the functions. Okay, all right. So I give you now, you know, submit the question to the classroom as I already give you the assignment. So that is the assignment. Okay, submit now. All right. Now for those people only come today, the submit. If you don't come, okay, you don't want to do it now. No, don't have to do it. Okay, you just do for your practice. To submit only for those people who attended today. If you don't attend, don't bother to submit. Okay. All right. This bonus is only for people who come today. Okay. So submit now. All right. I will expect. You know, you don't have to do any more correction. Okay. I give you already the correct answers. Maybe you take time 1 or 2 minutes. But if you cannot, just leave it as it is. You go home, make the correction. Just submit to me whatever you have. What I want to see is the work. So I give you an additional, additional work to this question. What about, maybe you just do for your practice. Now, if say t now equal to 5, okay, if t equal to 5 rather than 1, I want you to do the same analysis, same question, same work, and see, what happened to the excess burden, what happened to the incidence of the tax, what happened to the revenue, and things like that. Okay, so this is for your practice. Do another thing when the tax is equal to 5. Okay, all right. So I'll see you again. Submit now. Okay, and I'll see you again next week. Next week will be our final week, last week. Okay, all right. I'll see you again. Assalamualaikum warahmatullahi taala wabarakatuh.
Waalaikumsalam.
Waalaikumsalam. Thank you,
Okay.
sir.
All right. Good.
Thank you, sir.
Okay. Thank you.
Yes, sir.